Good evening, all. I'm Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 10th of January, 2024, getting on to 5:40 p.m. Central Time. And yeah, the ETFs are released. All of them are released. They didn't play a game. You know that Go-Go commercial? I've tried all the different diets. Well, all the ETFs that I know of that the SEC received the requests for, and all the forms and all the steps that they went through properly, 11 of them were released today. I know the SEC doesn't want it. They will go after these ETFs. You watch. If they couldn't control it because of the court order, that doesn't mean they can't control it if these ETFs, when they come out, don't pay attention to the rules. You know that they don't want these to exist. If you don't realize that they waited to the very last minute today where they had to release it via the court order. Be aware of that, all right? The next thing, understand what these do. These allow institutional money to come in the market via the guise that, oh, it's now an ETF, it's regulated, it's on the exchanges, blah, blah, blah. Okay, but what's not regulated? How the prices are derived. Are these going to trade at a discount or a premium to the whatever the cash ETF is? What happens to the futures contracts? Do they lose volume? Do they keep it? You still can't take one of these and go to a coffee store, your choice, Starbucks, Pete's, whatever the heck you go to, and you go there and you give it to them. And if you did, you do realize the cost associated to somebody is going to be a lot. You've got to get it out of your ETF. You got to pay somebody to take it, do the work there to let the merchant know, okay, here's your money in some form. It's got to be converted. Most people can't pay their bills with ETFs. It's going to be cash. There's too many transaction fees for it to yet be modern mainstay. But that's not what the crypto people are about. They are about there's another way. Now, here's what they lose with the ETF. They can't hide their money. Go out and try today to buy an ETF on a U.S. stock exchange. Got to open up an account. Got to give your social security number. You've got to fill out forms, your net worth, where you're at. They know hide and everything that you want to think you're hidden. So the idea of crypto, when it began, and this is the perfect vehicle, if you will, for illegal gains of one type or the other. Well, the moment you put it into an ETF, if you buy it through the ETF, you've lost that. I think that's a good thing. I don't think that's a bad thing. But that'll keep the spot market still going. You know, the culprits don't have to use ETFs. They can still deal anonymously in other ways. That will bother the SEC till there's no tomorrow. You can't do that with a futures contract. You got to open it up just like a stock account in order to trade it. Okay, enough of that. What else? Well, we have CPI coming out in the morning. That's going to be super important. Anything under a 3 number is going to be looked at favorably, and anything over a 3.5 headline and or core is going to be looked at, that number's not so good. So you got to pay attention. Then you get PPI coming out on Friday morning, and we're in the earnings season. It begins. How are the banks going to do? How are the financial companies going to do? Where are they? How do they go about it? I don't know. I told you very clearly, I couldn't have done it any easier. I think it was this morning and yesterday. You had a free look at what was going to happen in the Bitcoin era. I said, when the leak came out, you already knew what the market was going to do. Now that it's there, you don't have to believe me, but the reaction to the 11 didn't make a new high. Whatever the high was yesterday was it. That's when it comes out. Been around this so long. It's like somebody releases a report early. Then they go looking, how did that happen? What happened? What happened? You still get those things happening. You know that, and I know that. But the reaction to it you get once, and you don't keep discounting the same reaction to it. That doesn't mean you can't get legs to this later, but that's it. Nat gas fell back. I told you, you had 5 days over the upper Bollinger Band. The odds were it was going to pull to the right-hand side. You've got super cold weather coming into the Midwest. Be careful. This is not the time you want to be shorting the heating oil when you get the first bad weather. bonds, notes, stock indices. It was watching paint dry today until the last few minutes of trade. And the reason the last few minutes is people go to sleep at night, they wake up in the morning, and then they get the CPI number, and it'll be whatever it's going to be, and away you go. Foreign currency markets, we're still getting a bid into the British pound. The Aussie dollar, well, the Aussie dollar had some good numbers in that CPI is falling, giving them a reason to cut rates very possibly soon. But the market's looking at it, well, it fell, but the bank hasn't done that yet. And in the Japanese yen, if you're watching wages, there's real problems. Right now, real wage growth is down, and it's dropping the yen because of that. So the people that early on were saying buy the yen, sell the dollar, they're extremely wrong right now. But before March rolls around, the labor unions there are making their deals. They're going to be super inflationary. In order to get young people, retain them, they've got to get this up. So you're hearing numbers of 5 to 7%. Yeah, wage gains. That'll be real over inflation, which almost doesn't exist in Japan. So we'll see what this does, and that changes the game down the road. Okay. So when we look at the S&P, for all purposes on a closing basis, you're at the all-time highs. There's nothing bearish here. This is a close-only chart. I then look at what the market's done. If you don't see the trading range, maybe you should go to your eye doctor. Top, bottom, bouncing back and forth, and that's what you're doing right here. Are you trending? If you define a trend in an uptrend, it's higher highs, higher lows, no. If you define a downtrend as lower highs, lower lows, no. What you have is a wish. One of these things. You got the higher high and lower low. That doesn't tell me much of anything. The market's been playing at the 18-day average 3 days in a row right here, sort of neutral. And you've given the chance for the Bollinger Bands, the black dashed lines, to narrow in very dramatically. So your resistance for tomorrow comes in at the 48.60 level. The support's going to be 47.93 to start the morning out. And you're overbought. I hate the fact that you're overbought. It's nothing that you can do with this from my perspective. In the NASDAQ, first thing I look at, not quite overbought. You're knocking on the door, but to be overbought by my definition, one of the lines, it'll be the K line, which is called the red one. That has to be over 70. You're knocking on the door. Are we trending? We are not. We have the same issue. A higher high and a lower low, and sideways in the Bollinger Bands. The Dow, crystal clear, same problem. You came down when you lost the embedded reading. You went to the 18-day average. You fought a battle for 4 days there now, and the market's just sort of sitting in there. We're going to break out of all this. I don't know which way. I don't pretend I know which way, nor do I care at this point. It's nice to be in cash, and then you take another look at the market, and that's where I have my subscribers at this point in time. The one that has a downtrend is the Russell, and this is the one that everybody's favorite. You know why? When I watch spread trading in the futures market, you get the front month in a bull or a bear trend. Then traders try to come in the back months, and they go, well, look at that, so out of whack. That is such a bad way to trade. I used to do that. And, in the old days, you'd have limit up and limit down, and traders would go, well, I'll get in the back end and I'll lock in my loss. No, you're not. You're probably increasing it. And that's because it's a different world in the back. In the futures, it's another set of fundamentals than what's moving the front end. People never got that. I think spread trading is one of the hardest trading there is in futures. I know people love it. If you can grasp the fundamentals, terrific. But see, the moment you get out of the front month of futures trading, everything drops in volume. And it gets thinner and thinner and thinner. Option trade. You could have real good trade until you get a report. And when the report comes out, I don't know if you've ever watched volume. It falls apart because traders do this. Not me. I'm not putting anything in. Let's see what that does. Well, the futures will trade it through. You're not doing it there. You have to understand this game and have to play by its rules. And that's why you so often hear me say, and I'm saying it tonight, why would you go through the CPI report? What do you stand to gain other than you're on a train track, a bullet train's racing at you in Japan, and you're going to be able to jump out of time out of the way just in time. No, you're not. No, you're not. Why do it? It doesn't make sense, all right? You wouldn't tell your kids to do it. Why are you doing it? All right. So still bearish but oversold here. 10-year note, same thing. Is the market going to be able to clear the 18-day average, get over it, and act bullish? Or is the CPI going to say, market's got it wrong. We are not going to have 6 rate cuts in 2024. Now, this is the first of 3 CPI reports we get before the March number. January's not going to have anything happening on interest rates from the Fed. March is very much in play according to many traders. I won't argue that. If you had weak CPIs and PPIs and labor starts weakening, why can't March be in play? My point of view is I don't think it's going to work that way, but I don't know. I don't even have the first CPI, let alone all 3 of them. I have an open mind to whatever's going to happen. But as a chartist, going into the report, what is it? Bearish. Lower highs, lower lows? Well, to a degree. It's really lower highs, but it's higher lows if you look at the 10-year. That is over that. So it's fairly neutral, and it reverts to bearishness if 111.22 is taken out, unfortunately, right into the lower Bollinger Band, where 95% of the time the market doesn't stay out of that number. It's the same pattern in the 5-year note. Lower highs, but higher lows. I'll let somebody else want to play that game. In the dollar index, big time resistance at the 200-day average in gray, which comes in at 102.65, and the Bollinger Band top at the 102.71 level. All right. So you've got, there's your resistance. If you get underneath here without getting up and taking out the highs of Tuesday, not today, and you were to get under 101.78 and a half and close under 101.71, let's say, bearish. Could lead all the way back to 172. Bullish, you got to prove you can get through all that number. I don't know. I don't see anything that excites me there. In the euro, you can see the neutral area. It's the flip-flop. It's a mirror image, just flip it. Your support's the 200-day average. Your resistance is the 18. In the British pound, you are still in a pattern of higher lows, higher highs, with the 12800 area still acting as resistance. You are not overbought. This is still a friendly market at this point. In Bitcoin, what number are you stopping the rally at? Tell me. Take a look at the chart. You don't think it's right here, the upper Bollinger Band? Eyeball time, maybe you need. And you're overbought. I'll let the other guy want to buy it. I wish you the best with it. I don't tell clients to buy upper Bollinger Bands. I tell them to take money off their long against it, off. Then we get to Brent versus WTI. These are new highs. Why? Well, the Houthis. The Houthis have taken control of the Red Sea, and they have told the coalition to go screw themselves. Saying it in a nice way so I'm not in trouble on Facebook, YouTube, or anything else. Please understand that. But that's what they did. Blinken yesterday thought he was speaking for the coalition when he gave fair warning, this has got to come to an end. The Brits have said the same thing. Everybody's told them, and the response from the Houthis was really simple. I'll fire the most drones and missiles I've ever fired at you, and they did it. They all got shot down one way or the other. Nothing hit a ship, but their message was sent. We're not going to listen. We're going to do what we want to do, when we want to do it, and we don't give a damn until the battle in Israel is over, and a result that we want to see, we've taken over the Red Sea. Okay. How long? Good thing I'm not part of the military, okay? Because the reaction today would beget a very serious reaction. Everybody's worried about the war spreading. Take them out. You don't have to worry about the war spreading. Look at the Brent. Still in a downtrend. Still coming down through here. The market's watching what they're doing, and it's not nervous about it. That is the important thing that you're looking at. Wouldn't you think that you get all these attacks last night coming and crude would be up. The differential's up, and that's because the market is really in a bearish phase right here. Market could be going to $64. That is a price count. Now, if you don't know what price counts are, we at the Linn Group put out a technical study, and we send you charts every day. And one of them is called a price count. And if the market breaks through the current lows, we have a $64 count. So that's what we think could happen if you break through these lows. I bring that up because at what point do you keep firing these missiles and you don't get a reaction? So if there's a reaction by the coalition, you would think that would be bullish on the market, right? But the market's seeing all this. It either saying now the coalition is too weak, they'll just act in a defensive posture because they don't want the war to spread. I accept that, and that is a big school of thought, and it's the prevailing one. Or then you get the more radical guys like me, and you say, you know something, somebody's got to teach them a lesson that when we ask them nicely to stop, please stop. Okay. Heating oil. You got up to the area off the cold weather. What do you do the first time you hit a Bollinger Band? Cold weather's here. Now the market's got to prove that it can hold it again. Do we have a trend trade? We don't. We have a market that soared, did its whole thing today, and you should have said, bye-bye, Miss American Pie. Same thing happened the other times. You had 5 days over in the nat gas. I teach you that here over and over. My morning subscribers teach you so much more than this in that subscription video. But you're going to get a question and answer period with me. I want you to come. So the question and answer period is going to be this coming Tuesday, my live webinar. It's free. You have to attend. I don't make a recording for you to view. It's 20 minutes long. It'll be at 12:30 p.m. Central Time. It's about chart analysis, question and answer period. Away you go. We use Zoom to do it. We're already 25% full. I sent out the first group of invites this morning. Kaboom. Could be more than that at this hour. I put them out about 11 o'clock. If you didn't get the invite, call my staff if you want one. Second way to do this, you can move your cursor to the top up here. You'll see an icon. Give it a click. The form will be there. When you fill out the form, in return, you will get a user ID and a password, and there'll be a link if you want to ask a question of me right there. That is the time and place to actually write the questions. I will take them on the futures markets live also. It's very hard for me to do spiders, ETFs, and stocks live. There's only 40 futures markets. I've got all the charts. There's thousands upon thousands of stocks and ETFs combined. I can't possibly have all those charts ready, and I don't want to sit there bringing up charts, putting up all the studies. So help me do that. I will take technical questions. Some people have already asked me about indicators. I'll be happy to answer what I think on them. So all you need to do is give us a call. I'm Ira Epstein, CPI Morning. I'll see you at 7:30. It's going to be an interesting morning. You take care.